Welcome to Capital Insights. Thanks so much for your time and being with us today. Can you hear the rotors turning? Can you? Well, what I'm really referring to is the rotors of a helicopter. Why is that meaningful? Well, we've started in the financial press, and we believe you're going to hear a little bit more of this, the term helicopter money. And we wanted today to explain a little bit about what that means. It relates to the central bankers of the world. You're going to hear more of it. We may even see some actions implemented that will be called helicopter money. So let's talk about that a little bit. We need to turn the clock back a little bit here to 1969. A very famous economist in the United States who's no longer with us, named Milton Friedman, did a speech where he talked about dropping $1,000 bills from a helicopter to the populace of any country, really, to try to stimulate an economy. You know, the central bankers over the last few years have done a lot in terms of interest rates and printing money, but this term helicopter money that Milton Friedman coined is kind of ringing in our ears and ringing a little bit louder because in the early 2000s, former Fed head Ben Bernanke did a speech called Deflation. It can't happen here. And what he talked about was that the Federal Reserve had this magic instrument called a printing press, and that if need be, the Fed could just print money and buy back securities in the open market. Well, remember, this was early 2000s when Ben did this speech, and it was the exact roadmap for what was to come in 2009 to present cycle. And at the time, Ben Bernanke earned the characterization Helicopter Ben. And there's a famous cartoon that was printed back in the early 2000s with a picture of Bernanke in a helicopter throwing money out of the helicopter. So this is where this kind of came from. But what does it all mean to us? And why are we going to hear more of this now? Well, again, a little backdrop here. We know since 2008 and 2009 what not only the Federal Reserve but central bankers have done globally is drop interest rates. The Federal Reserve dropped interest rates in the United States in late 2008 to zero, and they kept them there until December of last year. Well, at the time, what the Fed had thought was if we lower the cost of borrowing, that we would induce more people to borrow and spend that money or invest that money in the real economy. Well, that really hasn't worked. Why? Because, as everyone really knows, they borrow money for a reason. They borrow money because they believe that they can earn a rate of return on that money greater than the cost of that money. But we've been in a very slow growth economy, and we haven't seen that kind of borrowing. Number one, we were debt saturated, coming off of the, let's call it 2005 through 2009, debt extravaganza, largely in residential real estate in the United States. But we've talked about this many a time in terms of businesses not investing in themselves, but rather turning around and buying back their own stock. So dropping rates to zero really wasn't all that effective because, again, not many folks saw rates of return in the real economy that would justify borrowing ever more money. So the second part of the equation over the last few years in this cycle has been that the central bankers, and again, not only the Fed, but the Bank of Japan, Europe, China, etc., moved on to what was called quantitative easing. Quantitative easing, as you know, was the printing of money by the central banks, and they used the money to buy financial securities. And what they really thought was that if they could get the price of these financial securities up, people would feel wealthier, and they'd go out and spend money, and the economy would kind of resurrect itself. So what they did was they printed money, and they bought back securities in the investment markets. Well, quite unfortunately, over the last 3, 4, 5, 6, 7 years, that also hasn't helped in terms of reinvigorating the economy. Why? Well, number one, and I think we know this pretty well these days, is that the bulk of the, if you will, assets, and we're talking about stocks and real estate, etc., are really owned by the highest wealth demographics in the United States and really globally. So it isn't everyone who benefits when the stock market goes up. And that has not trickled down. The wealth effect has really not worked. And the second part of the equation is it's somewhat of a closed loop system. Let's just think about this. The Fed prints up a bunch of money, they buy back a bunch of bonds, and let's say they buy it from a major pension fund like CalPERS. Is CalPERS going to turn around and invest that money in the real economy? No, they're going to put it right back in the financial markets. So in one sense, it recycles in the financial market, but never gets into the real economy itself. And I think at this point, and I don't mean this in some pessimistic way by any means, dropping rates to zero and quantitative easing by the central bankers globally, again, not just the Fed, globally, has been a failed policy. But we do more of the same whenever we hit any kind of bumps in the road as we move along. So now we're hearing the comments about helicopter money. Next step, after dropping rates to zero, that didn't work. Quantitative easing, that didn't work. Well, we're going to try helicopter money. And this has really come to fore over the last few weeks after the British vote happened. Japan is considering helicopter money now. And secondly, a Fed member recently came out and said that if they needed to stimulate the economy, they know they're at zero interest rates right here, they would have to try something like helicopter money. So let's talk about what does that mean, what can we expect ahead, and have we ever seen this before? Okay. The big issue about helicopter money, unlike dropping interest rates or quantitative easing kept a closed loop cycle. The money just stayed in the markets and it kited, if you will, stock prices and bond prices ever higher as more money was printed by the central banks. And you can lead a horse to water, but you can't make them drink. You can drop interest rates to zero, but you can't force people to borrow. So, how is helicopter money different? Well, helicopter money is aimed at getting money directly into the real economy itself, and it can be accomplished in one of two ways. One of those ways is to do a tax cut. Again, as Milton Friedman talked about in 1969, why don't we cut everybody's taxes by $1,000 this year? They all have $1,000 more that they can go out and spend, and maybe that will reinvigorate the economy. Well, how's that going to be funded? Because if indeed we're going to drop everybody's taxes, the government's going to have to borrow more money to be able to fund ongoing expenses when that tax money's gone. Well, how do they do it? The Federal Reserve prints up money and it gives it to them. That's helicopter money. The second way that quote-unquote helicopter money would be put into the real economy is that the politicians would go on a fiscal spending spree. And what we mean by that, fiscal spending, government spending, spending on an infrastructure program. In the post-Brexit environment, about a week later, Japan had some major elections, and Premier Abe, or Prime Minister Abe, his party swept those elections. What does that really mean? Well, what it means is now Abe is going to be able to go on a fiscal spending program, roads, bridges, infrastructure, etc. And it can be financed by the Bank of Japan just printing up the money. Government doesn't have to borrow it. Just have the central bank print it up, give it to the government. The government goes on a fiscal spending program, and all of a sudden, there's jobs, there's employment, there's wages. The money gets directly into the economy. So those two ways, tax cuts and fiscal spending, the money gets directly into the economy. It isn't going through the financial markets. We aren't hoping somebody's going to borrow money. Money gets directly into the economy. As if we were throwing money out of a helicopter. That's what this really means. So the big question is, if we embark down this path globally, and I think we're going to see it first, if we see it at all, so we're going to see it in Japan. And we're going to see the test of helicopter money in Japan. There's just one ironic little twist. Japan's already tried this. You know that Japan has had a tough time over the last 25 years, and their economy has kind of been on the mat, if you will, for 25 years now. And they have tried fiscal spending programs already that have been financed by their central bank printing up money and buying bonds. So is this really going to change anything? And the answer is we don't know. But this is coming, and we wanted to talk about this now. It's being talked about in Japan. In fact, Ben Bernanke made a trip to Japan to talk directly about helicopter money 2 months ago. And he spent time with both the head of the Bank of Japan and with Abe. We're hearing it talked about by Fed members in the United States. We haven't heard it out of Europe yet, but as we've told you many times on both our videos and our written work, Europe is in trouble. Its banking system is in trouble. We expect, after all these years of avoiding it, there to be some type of a big bailout bill for the banks in Europe. They basically have no other choice. So, will this work ahead, a big bank bailout? we did that in the United States. Will dropping money from helicopters or this helicopter money concept work, even though it's already been tried in places like Japan? And the answer is we really don't know. We're just going to have to find out as we move ahead. But we wanted you to be aware of what it means specifically so that when you hear this in the financial press ahead, you'll know exactly what they're talking about. Before we leave today, I wanted to talk about one other issue I think is very, very important, and it's a result of the Brexit vote, and I think it's also reflective of what's happening politically in the United States. I'd pose a question to you. Is the global economy moving past interest rates and money printing right here? Let's talk about the British vote, just very, very quickly. If you dissect the British vote, it's the lower and middle classes that voted to leave. It's really the upper wealth demographic, if you will, that voted to stay in the European Union. Why? Well, it's also the northern part geographically of England that voted to leave. It was, if you will, London that voted to stay. Again, why? Well, the northern part of England. You're thinking about places like Liverpool and the Fab Four, right? Places like Leeds, former industrial centers that have watched their industries be gutted over the last X years and watched jobs being lost. The British vote wasn't about interest rates. It wasn't about printing more money. And it wasn't about helicopter money. It was about jobs. It was about the fact that people are very disenfranchised and feel very disappointed. Because one of the things that's clearly happened with quantitative easing and the rise in financial market values over time is income inequality has come to page one on the newspaper. And that's a big issue, and it was a big issue for Britain. And again, we're moving beyond interest rates, we're moving beyond printed money. Let's bring it home to our own shores. What's Donald Trump really all about? Is he a mastermind politician? Has he got some of the greatest economic commentary and programs we've ever seen? Not really. What he is a vote against the establishment, and he is a vote of disenfranchisement, if you will. Very much along the same lines that we've seen in Britain. One of the issues in the United States that we have never, ever seen before in the last 50 years is that in the current economic cycle, inflation-adjusted household income in the U.S. has fallen. It's not up, it's down. In fact, today, inflation-adjusted household income in the United States is where it stood in 1996. We're at a 20-year low in inflation-adjusted household income. You have disenfranchisement. You have disappointment in the quote-unquote American dream. You have the perception that what's happened with politicians and central bankers over the last 7 years has been an increase in income inequality, largely due to the fact that all of the policies, and this is perception, all of the policies have been to get asset prices up, to get stock prices up, bond prices up, real estate prices up, but we haven't done much in terms of the job front, the wage front, etc. And the big question that I think we need to ask ourselves is, will helicopter money really do the trick in terms of solving some of these global trade issues that are out there? These are really the questions. It's not about printing more money. It's not about interest rates. Will helicopter money really change this? And the reason we're bringing this up is because the voting booth is now going to be a major factor impacting both real economies and financial markets ahead. We've seen some economic numbers come out of Britain since the British vote, and it's very clear that Britain is slowing down right now as an economy. With all the uncertainty that's out there, there is a chance that Britain even goes into recession near term. We'll just have to see how all that works. But is that the voting booth now impacting the real economies? It is. And although we don't have the right to say this by any means, in one sense, it's a vote against the politicians and the central bankers. And it's very tough because the politicians and the central bankers will not look back at what they've done over the last 7 or 8 years and say, we shouldn't have done that, or this is wrong, or we fully understand these disenfranchisement issues. Not at all. They're going to continue doing the same thing that they've been doing now for about 7 or 8 years. And doing the same thing they've been doing in terms of expecting different outcomes. We just haven't gotten one quite yet. So again, We know we've thrown a lot at you in this commentary. We wanted to make sure, number one, you understood what helicopter money really means when you start to hear it increasingly in the financial press ahead. And secondly, to really bring up this issue of changing global political dynamics and how those dynamics can really impact real economies and financial markets. All part of the journey that we're on in the current cycle that we're living in that's very much unprecedented in nature. So again, we always appreciate your time in being with us. And on behalf of the entire team at Capital Planning Advisors, thanks so much, and we'll see you very soon. All the best.